Hello, everyone. Still waiting for people to join. We're expecting a large audience today, so we're going to give it another couple of minutes. Well, I think we can start. This session is being recorded, and the recording is going to be made available on our YouTube channel by the end of the week. Please use the Q&A chat during the talk, and questions will be answered at the end. You can also put your hand up, obviously, at the end, and you can voice your questions. Okay. So it is a great pleasure to introduce our speaker today, Tarun Arora, Chief Technology Officer at Avanade UK Energy and Utilities. An award-winning professional and an author, Tarun combines his energy trading experience with AI and large-scale market platforms, helping organizations move from experimentation to operational capability. Tarun, welcome to our 2026 webinar series on AI.
Excellent, Anka. Thank you for the warm introduction, and it's great to see a lot of familiar faces, or should I say names in the audience, and it's a pleasure to be talking to this group again. And I think more than ever, AI is a hot topic, and over the next 45 minutes, I plan to talk about what are we doing with AI, where are the key trends and value pools, but also leave 15 minutes in the end for questions, and hopefully we can have an engaging conversation as we go through this next 1 hour. So in terms of introduction, I'm the CTO for Avanade. I look after all of the work that we do in the energy and utility sector. Over 20 years experience in the energy markets, and AI is just the new kid on the block, but the evolution of that is where I've spent most of my career. And Avanade is a global system integrator with about 25 years of deep experience in the energy markets. But so to speak, before we talk about AI, let's ground ourselves in what's happening right now in our markets. Over the past few weeks, I'm sure you're all seeing the geopolitical tensions in the Middle East have again reminded us of something very fundamental, that energy markets are just not volatile. They're truly unpredictable. Look at the oil flows, the LNG routes, especially the risk premiums with insurances. They've all changed overnight. And when that happens, the impact just doesn't hit front office trading. It cascades straight to the area we work in the most, which is post-trade. Your collateral calls have spiked, the margin requirements have moved intraday, the settlement mismatches have suddenly increased, and what's generally happening is that the credit exposure is becoming harder to track in real time. And the reality is most post-trade functions are still built for a world that assumes stability, not shock. And that's the gap. And that's where AI is no longer a nice to have. It's becoming the control system for post-trade. Now, we have seen in our lifetime, seen a fortune being spent in best technologies to optimize trading decisions, focused on front office, but we've barely seen modernization in how we process the consequences of those decisions. I'm talking about the very post-trade function. And in energy trading, volatility is not the problem. It's generally the latency in which we respond to the problem. And post-trade is where the latency is highest today. So the question is no longer, can AI improve post-trade? The real question is, can post-trade survive the next market shock without AI? But the fact is, if all of this is so great with AI, then why are headlines like this coming out every other day? The uncomfortable truth still remains that across the industry, 95% of generative AI pilots are not delivering measurable ROI. And I would say that in energy trading, this number is probably even higher. And it's not because the technology doesn't work, it's because we're applying it in the wrong places in the wrong way. We're putting AI on top of broken post-trade processes. We're picking one small part of the cog and trying to automate that process to claim the KPI that we have applied AI within our organization. And this wrong mandate of let's do something with AI is where the challenge is becoming imperative, where these metrics of failure are cascading from. So instead of redesigning the value chain, the mega process, we're really looking at solving the simple problems with AI. And so when AI gets talked about in the context of energy trading, we're thinking right away, where do I apply AI in front office? And front office gets prioritized. And we've continued to focus AI on trading decisions, not specifically on settlement, reconciliation, and collateral. The use cases, so to speak, also have no measurable enterprise ROI. When you see use cases, they are trying to solve for knowledge management or they're trying to solve for point solutions. And these AI pilots are not tied to a tangible business outcome, not P&L, not risk reduction, not working capital improvement. And without that substantial business metric associated with the use case, it's not really measurable. It's really just an experiment. And so let's not forget, right? AI isn't a silver bullet. If you put garbage in, you will get garbage out. The repositories aren't data ready. The trades, the invoices, the settlement, the collateral, they're all fragmented across ETRMs, spreadsheets, emails. And so we're measuring AI success in demos and not in dollars. And that's why the industry continues to see failure in AI. The industry hasn't failed in AI, it has failed in where it applies AI. So, there'll be these dramatic headlines around how certain consumption or adoption of AI is failing. But when you double click in, you see the most successful organizations are applying AI in a very impactful way by tying it back to real business metrics, by looking at the end-to-end value chain, by really redesigning the processes and using this as an opportunity for optimization rather than trying to solve for the little bits and bots around the corner. The other thing is we also have to challenge the thinking a little bit and say, it's not just a technology problem to solve. Time and again, we hear that culture eats technology for breakfast. And it's because no matter how sophisticated the technology is, but unless you drive that operating model change, that change management, you're not going to see the efficiency. And that underpinning of the operating model, which makes the organization an AI frontier firm, is when you change the mindset for how people think about the adoption of AI, not as a secondary mindset, but more as a primary leading interface. So I want to move us on to a little bit about what are the challenges in post-trade. And for me, it's a story of two tales. One obviously is above the surface, which is visible to everyone. And that's the nub of the conversation in the boardroom. But then the real challenges actually sit below the surface. And these are very conveniently ignored, right? Because you're kind of left with the mandate to deliver higher metrics without really empowering you with the technology advancement to solve the problems that are underneath that iceberg. And so the audience in this forum knows that the volume, the volatility, the collateral intensity, the uptick in renewable, the complexity that comes with it, the geopolitical uncertainty, and then the regulatory fines. I mean, these are the pressures on post-trade. If we look at the volumetrics, the power, gas, and LNG volumes have gone up by 20 to 40% year on year across all major hubs. If I look at some of the metrics around ICE volumes, I mean, these contracts are over 1.2 billion now. These are record levels. So volume is no longer scaling linearly. It's actually compounding significantly. And then apply along with that the geopolitical shocks that are driving real-time collateral stress. And that's all of the top level challenges that we have to go through in post-trade every day. And often, people will still allude to the 2022 crisis as an example of how systems and technology hasn't scaled. But what we're seeing right now is different with the ongoing Middle East tensions, shipping risk, oil market uncertainty. Volume isn't really episodic anymore. It's continuous and it's changing every minute. Um, and let's just wait for the next tweet that comes out from Trump, and that could push oil prices further up or down. And what this means is margin calls are no longer predictable. The collateral requirements are no longer stable, and the liquidity planning is also not a linear chart anymore. This is happening in intraday, right? This is happening in real time. And you're not getting margin calls because you traded badly. Of course, you traded well with the best foresight on your trading decisions. You're getting margin calls because the world's moved while you were still processing yesterday's trades. And this is the critical point, right? Because we are still managing our intraday risk with historic overnight processes. The market's gone real time, but post-trade is still running on yesterday's information. And this is now the segue to talk about the actual issues that are under that iceberg. We're still spending 30 to 40% of our time firefighting at the ops level due to disconnected systems and bad quality data. The trade was incorrect, or was the price fixed incorrectly? Is the P&L reflecting the wrong information, or we didn't catch that right version of the trade update? And these are the fundamental issues that take up majority of the time. Millions are spent in system modernization, in upgrades of these systems, and yet the integration of system is suboptimal. The human still continues to be the integrator. We're manually copying data from SAP, from ETRM systems, and compiling them in single spreadsheets to run the most critical processes within the organization. The investment in change management is always underdone. The target operating model leaves out training and upskilling of the key resources, which means although the technology has somewhat advanced, people haven't yet learned how to consume that technology. So it's the combination of the two, which is really what's imposing the pressure on post-trade. Only looking at the singulars of the trade volume exploding or the volatility being a challenge is just addressing half the problem. But also just looking at the system failures doesn't mean we have the best picture to solve for. It's the combination of the two that we need to look at holistically. So if the problem is clear, which is volatility, liquidity pressure, fragmented post-trade, then the real question also becomes, what does good actually look like? And I think the more important thing is not 5 years ago, but today, because a lot of the times you hear what good looked like 5 years ago being played today. And for me, it's the shift from processing trades to controlling risk, controlling liquidity and outcomes in real time. So if we look at this roadmap and this journey, a good place to start generally is to drive the automation of confirmations, netting and settlement across all trades, not just your OTC trades, but your bilateral trades, your entire trade stack. And we have to start with automation, but not just traditional automation. This is AI-led straight-through processing, and we'll be talking about some concrete use cases down a few slides. This is where confirmations, settlements, invoices are all matched automatically across your structured and unstructured data. I'm talking emails, as well as PDFs, ETRMs, and there could be more than one. And critically, you still want the human involved, but maybe not in the lead anymore, only on exceptional cases, on categorizations or high-value deals. Because the goal is not just to drive efficiency, it's also to reduce the operational noise entirely coming out of the system. And as you progress through this journey, the next step tends to be to look at your intraday liquidity and collateral control. I mean, for me, this is where it becomes really interesting and really relevant, especially in today's market conditions that are driven by geopolitical tension, the oil uncertainty, the LNG flows. Liquidity has become the real risk. So actually, post-trade needs to evolve from an end-of-day margin visibility to an intraday real-time control of collateral, exposure, and cash. But for that to happen, a lot of underpinning within the systems need to change. We need to have the ability of bringing that data through a streaming architecture. And this is, again, going from a business problem or business ideology to how that translates to systems evolution. Being able to disaggregate the data as we stream it allows for the ability to run your models horizontally on the data rather than waiting for the data to land, be harmonized, be all collated in one place for the end of day batches to run, right? And this means we're knowing you're knowing your margin positions now and not tomorrow. It's about optimizing collateral across CCPs and bilateral agreements dynamically and stress testing liquidity almost continuously and not in the good old batch cycles. Because it's really important that we manage the volatility with here and now information and not outdated yesterday's information. And as you then progress on that journey further, you have to look at regulatory reporting as a differentiator. So many times we approach a reg reporting project as an obligation, do the bare minimum to meet the regulator's obligation to do the reporting. But innovative firms are using this as an opportunity to invest the IT capital in upgrading their IT landscape. So rather than just meet the obligation, how do we modernize the estate to harness more value out of this data that we're sending to the regulator? And investing through regulatory projects allows you to move from reporting end of day to becoming more real time, embedding compliance in those streaming processes that I'm talking about, which means you're now able to report once and reconcile almost immediately, which drives down submissions to near zero. And as you then progress through that solid foundation of the architecture, you can move forward to a predictable operational state. And so we're talking about moving from automation to intelligence. And this is where AI starts to predict where things will break next. For example, being able to tap into that historic data set to see where late confirmation, disputes, and mismatches are likely to occur. And instead of then reacting later in the life cycle, you're proactively preempting where that next intervention might already be required. And this is where ops fundamentally changes from firefighting to prevention. But this is all stemming from the power of the data. And so going back to the earlier point, right, garbage in, garbage out, if you don't have the right data repositories, the right system architecture for integration, the streaming architecture, which decouples the data and gives faster access to it, a strong data core that allows you a medallion architecture through which you have the raw access to the data, but to the model zones, which are high quality goal layers that are trusted, are essential to sort of deliver to this mandate. And then as you progress further on that journey, right, counterparty and credit intelligence becomes an imperative. And while a lot of the times this is seen as a front office pre-trade opportunity, but in today's market, it's clearly moved into real-time post-trade because exposure is constantly shifting, the price is constantly shifting, the collateral is constantly shifting, the market events. Ultimately, a counterparty that looked fine this morning may not look the same this afternoon. When sanctions come in and rapidly change, as we've seen with Russia given a little liberal outlook now to consumption of their oil on the tankers. We need that continuous exposure tracking. Those AI signals on counterparty stress, the dynamic credit utilization and limits is really not a static control anymore. So this is a journey, as I say, right? And when you look at this journey, it's not just about improving post-trade operations. It's really building that real-time control layer for trading, risk, liquidity, and compliance. And for me, as you approach on this journey, the systematic changes that are needed to the architecture are the building blocks you're laying step by step to get to that destination. Because clearly, this is where AI changes the game. Having that good quality data means you can drive that intelligence. So moving on, right, let's spend our time here talking about AI use cases. And while not exhaustive, we're really looking at the post-trade, the settlement and accounting, the reporting side of the story. And so let's talk specifically about some use cases. The first one, which I want to touch on, is the trade and invoice automation. And this is a simple one, but it's also a very high impact one. Because as we've seen with machine learning back in the day, it was very much possible to look at an invoice and apply machine learning on top of it to extract key information out of it. And with that key information extraction, you can build some more automation through OCR technology to go and look up your ETRM systems to reconcile the trades. But as we see with renewables, the assets becoming smaller, therefore the counterparty footprint increasing massively, the invoice volumes increase, but the invoices per counterparty not necessarily increases in the same ratio. Instead, what's happening is you have far more counterparties with fewer invoices to reconcile. But what that does is you still need to go back to that legacy machine learning based OCR implementation. And every time now you onboard a new counterparty, you have to go through the rigor of setting up that automation again. And if anything in the structure of the invoice deviates from the original structure, we see that the accuracy of this matching drops dramatically. Now, what AI does here is fundamentally different because generative AI, these large language models have really good ability to deal with ambiguity because they understand language at the same, if not better level as humans. And therefore, they're able to look at the document, not in patches, but in its entirety to understand the semantic structure of what's happening in the document. And therefore, you don't always need to pinpoint where the counterparty ID is. You don't always need to pinpoint where the table and the row for the reconciliation record needs to be. The large language model with the right training, the right tools is able to decipher that really quickly. But not only that, it can deal with multi-language invoices as well, which is something that it offers natively as a capability. So for me, when you start to look at this use case, while it looks very simple with AI, it's very high impact and it tends to deliver very tangible outcomes because almost by impacting this part of the value chain, you can drive significant amount of automation. And what we're seeing in the field with the work that we're doing for our customers is that this is processing over 90% STP on invoice reconciliation. And that means not just faster processing, but a significant reduction in the dispute rates. In fact, less than half, because the models are really good at extracting the entities out of the invoices with minimal retraining when things change, being able to absorb 10 to 20% of the abnormality in the changes of invoices. Therefore, onboarding new counterparties becomes easier as well. Therefore, the testing pressures in your back office and middle office team starts to reduce as well. And therefore, an easy use case to get through fairly quickly. The next use case I want to touch on a little bit is the cash and collateral forecasting. And again, this is where it starts to get interesting in today's market, right? Because AI predicts margin requirements based on price movements and positions. And you use the positions to simulate the what if scenarios. And when you're driving that simulation of what if scenarios through the existing forecasted positions, you're improving the accuracy by 90 to 95%. And some of the tangible outcomes we're seeing as a result is that the cash, the ideal cash is reduced by 20 to 30%. And so for me, this is not just efficiency. This is about improving the working capital optimization, which means this capital can go back into trading swiftly. The third sort of use case we're seeing emerge a lot is AI-based claims handling. And depending on the part of the business or the level of the organization, voice AI is playing an important part in this use case as well. And it's a real world problem, right? We see disputes and claims come in quite a lot. Now, in this case, whether these claims are coming in through phone calls or they're coming through emails or forms, AI is able to read or listen to all of these streams across the omni channels and classify them. And also, when the human does this job, they generally look at the runbooks that have been created for these resolutions, which are then fed to the models to provide the similar treatment. And therefore, the AI does the first draft of the suggested resolution with thresholds on either side on the type of claim where the human may or may not be involved, right? And that automates the entire value chain there, which means your cycle times can significantly reduce by up to 60%. And that also means fewer escalations and faster closure and freeing up that human time to look at other important aspects of the process. So this takes away that manual triage. If the human is still involved in looking at the resolution and refining it, the legwork is being tackled by AI, which I think is adding tremendous value. The next use case we're seeing in the field quite a lot is the settlement risk prediction. And this is very much moving the dial from being reactive to proactive, predicting where the settlement failures are likely to happen. Because AI, if sets up correctly with those data foundations, has access to the data to see where historically late confirmations and mismatches have happened, where certain counterparty behaviors have led to these kind of outcomes. And with that data training and that correlation of the pattern, it's able to start to do some prediction and forecasting on where these failures are likely to lead. And when you think about spending the ops time, you would rather proactively spend the ops time in looking at those specific counterparties where the forecasts for higher failure on settlements are likely to happen, rather than the low value ones, which are the ones that are quite easily addressed by themselves. So the combination of use case 1 and use case 4 starts to deliver high value from an AI perspective. The other use case that we're seeing quite a lot in the field is around continuous assurance. And think of this as an audit agent. It's all well and good automating the process on settlement, automating the process from a pre-trade perspective on the front office side in trade decision making. But having an audit agent which is able to create the compute necessary to run audit against every deal to provide that continuous assurance is quite a blessing, right? Because then you're tackling variations early on in the process rather than having to retrospectively come back when they're caught downstream in the process. And again, having a good data foundation means the ability of the audit agent to actually empirically sift through the data to identify failure patterns could really supercharge their ability to create anomaly detection early on. And ultimately, no one would frown on a KPI that delivers near zero fines and near zero resubmissions, right? And I can go on and talk about more use cases, but for me, it's just not use cases. All of these use cases are valuable. But here's the problem. If you implement these in isolated point POCs, you may or may not get incremental value. But when you start to connect them across the life cycle, your end-to-end value chain, you fundamentally change how post-trade operates. Because let's be honest, right? These aren't independent problems. Invoices actually affect cash. Cash affects collateral. Collateral affects credit exposure. And credit affects trading capacity. So today, if we manage all of them in silos, we're not actually harnessing the end-to-end value. And AI allows us to connect all of these single point solution into an intelligent control loop. And this is where the architecture matters, right? So looking at just use cases in isolation is maybe half the journey. What we need to look at is a systems architecture, an organization architecture, which builds up to this foundation to enable the successful delivery of these use cases. So here, I'm talking about a trusted data layer, because without clean data, nothing really works. You need AI orchestration. Again, we've moved past this nomenclature of Gen AI, single shot AI, to the world of agentic AI. And to spend maybe a minute talking about why agentic AI is the future and is fast becoming the operating model, superseding single shot AI, is with single shot AI, we have one opportunity to ask a question or give a task to a model, and the model really just has one opportunity to solve for that problem. So if not enough context is gathered, the result may fail or the results may be suboptimal. When you build into an agentic AI architecture, like humans, you have roles who act as agents. So rather than ask the question once, the question gets asked to an agent, and the agent, like a human, will ask the same question or a sub question to another agent, to another agent, to another agent, and then try and converse across the agents to formulate the best response before responding back to the requester. And this starts to mimic the human behavior, the desk behavior, where you don't operate in isolation, you operate on knowledge bases across other humans. And that ability to have a conversation being mimicked in the agentic architecture is what makes it highly accurate, reduces the hallucination fiction that we've seen in the old ways of working. And so that AI orchestration layer is really pivotal, because to enable the dynamic conversation between these AI agents is what makes the difference. And I think, and this may seem moonshot, but trust me, this is the future we're gazing into, at least in the 12 to 18 months ahead of us, where we will see repository of AI agents being available within an organization, and you will be picking and choosing your AI agents for your desks to run your end of day processes, your back office processes, your middle office processes, your post trade processes. And you would be doing performance management on these agents as well, because ultimately it's the performance of the agents that will improve over time with the quality of the data, the fine tuning, the upgrades to the large language models, which will continue to drive further efficiency. So this holistic architecture needs that orchestration layer, because the problem that we're trying to solve for is not linear, it's dynamic. If we try to solve for the linear problem, we really don't need AI. We could still tackle it with your good old OCR-based process automation technologies. But also the layer on top, the Copilot layer, is important, because embedding intelligence into workflow, your business context, is what drives the differentiation. When you look at two organizations doing AI, one would say if the models are the same and the technology application is the same, then the results should more or less be the same. But it's the Copilot layer which makes the difference, because this is where you start to seed in your context of your specific organization, your own specific runbooks, your own specific data. And the Copilot layer does two things, right? It does the quick Q&A answers, but it also provides the tools to your agentic AI to solve for challenges when it runs into it. So this is not just about one model. This isn't about Claude versus Manus versus OpenAI models. It's about building that holistic architecture through agentic AI, which allows you to pick and choose the best models for the best steps in the end-to-end value chain. You could be using small language models to solve for low complexity tasks, and using your large language models to solve for the more critical thinking-oriented problem surfaces. And when you try and join up the value chain, you get the best value for your money, because you're able to optimize the tokens that get spent in solving the problem. Because not just we want to solve the problem, we want to solve the problem in an optimal, cost-effective way. Because if actually running this IT process costs more than the human capital, then one would question over time, are we really driving optimization? So for me, as I said, right, it's not just a technology problem. We have to look at, from an organization perspective, how do we see success being driven? We have to be very commercially minded, a commercial outcome-based KPI that starts with the value proposition for what we're solving for. Not just the technology answer is really important. We have to think about the front to back context. As I said earlier, right, trying to optimize a silo here, one small cog in a pretty broken process, will not give the results that are necessary. For example, time and again, I see organizations trying to solve for this one PPA contract, but yet all of the bilateral trades are pretty broken, right? So we want to look at the front to back context. You want to look at the end-to-end value chain, and you want to look at that mega process. And as you solve for the mega process, you try and get more value, because you're attacking the higher surface of where the redesign and the optimization can make an impact. You also want to look at the predictive and adaptive sort of lens on it, being preventative rather than just curing the dysfunction. You have to think about governance and the design, right? We work in regulated markets, and therefore we need to treat the data with that mindset as well. Now, often a question that comes up is if these coding models are becoming so supercharged, can we just vibe code some of these use cases? And of course, you can vibe code these use cases, but a lot of the time, these vibe coded applications don't have owners that would look after them after the developer stops coding them, or actually they start to take up more time from the key personnels within the business or IT that have coded up these point solutions to maintain them over time. Or they have serious security flaws where things like keys, passwords get embedded and get overshared or deployed on public cloud environments, leading to more of a bigger blast surface area for penetration from bad actors on the internet. And so by designing that governance layer upfront, by designing that role-based access control, that data segregation, you set yourself up for success. And ultimately, any solution like this needs to be built with a scalable modular architecture. We want to absolutely move away from the big monolithical architecture mindset of let's just build the entire stack once and build it right. We want to make sure that these Lego bricks are modular and replaceable. As our business evolves, as the opportunity surface evolves, we need to have the ability of being flexible in how we can swap these modular pieces out. Also, it means when we incrementally add the next modules in our AI architecture, we have the ability of regressing and testing the other components or being able to change them without impacting the other ones. It also means we have the ability of scaling individual components infinitely rather than getting blocked in trying to scale the whole system, right? And so the emphasis on designing with the right software mindset, the right cloud architecture mindset, from a scalability perspective, from a modular perspective, is the imperative we need to start with. So for me, the playbook for AI isn't just, what are the use cases I need to go for? It's about identifying the use cases, but in line with your end-to-end value chain. It's identifying how you apply a technology architecture that gives you good quality data that can constantly be had from modular ETR on the state. How do you apply the combination of small language models, large language models from different providers to solve for what they're best at, and then work up the stack to build your orchestration layer, which can provide the dynamicity in being able to call into the agents. The agents are built purposefully with the mindset of constant evolution, and those agents are given access to the right data sets to be able to contextualize the answers that they're looking for. And building that co-pilot layer on top, which is your differentiation for your organization, means when you're building those AI use cases, they're far more successful. But being commercially minding, looking at the end-to-end value chain, by designing governance upfront and looking at that scalable architecture stack, you become an AI frontier firm. And so what we're seeing with our customers that are applying AI in this way is some tangible outcomes. And so let me close with this, right? AI in post-trade is no longer an experiment. It's actually delivering real measurable outcomes. And the point we need to remember is if we optimize solutions for tasks, we're really creating point solutions. But when we connect with agentic AI systems, we are optimizing outcomes. And for our organizations, we need to optimize outcomes, not just simple tasks, right? It is this reinvention that we're after, not the transformation of point silos. So we're seeing with our customers, break rates reduced by up to 70%. It's not because people are working harder, right? It's because AI resolves issues before confirmation even happens. The settlement cycles compress dramatically, right? We're seeing reductions of up to 50% there, from T plus 2 weeks to T plus 2 days in some cases as well. And so the third aspect of the measurable KPI that we're seeing is around your collateral buffers. And it just means faster cash, less exposure, less operating drag. And in a volatile market, speed is controlled. So I definitely think these are metrics to aim for. Metrics are metrics, but the mindset needs to change. We need to think about AI not as a side project, not as I have an innovation pot of 50K here, I'm going to try and spend it on solving for this one cog. We need to approach this with the mindset of how do I make AI my operating model? And the firms that recognize this early are going to pull ahead. Can we imagine AI as our first employee? And because if it was our first employee, we wouldn't just hire it and leave it on a desk, right? We would induct it, we would train it, we would have a coffee with it, right? And in the same way, if AI becomes your first digital employee, we're not talking about a chatbot. We're talking about an agent that reconciles trades, that we constantly upgrade with model upgrades, that we provide more contextual data to. It can then predict breaks, it can monitor exposure, it can optimize collateral, and it can flag risk in real time. And working alongside your teams, because this is where it will continue to get realistic relearning, it will continue to improve continuously. So the question isn't whether we need to start, the question is start in a way that scales. Start with one high value use case. And that would be my call to action for this group here is to identify that one high value use case and then connect it to the end-to-end life cycle. But think about designing it for scale. Think about putting the right governance and guardrails from day one, getting that business buy-in, that KPI definition right. Because then when you deliver it, the business case is almost solved to go and create the next leg in that journey, right? So for me, the market has changed, right? The question isn't about getting started. It is, has your operating model caught up, right? And if it hasn't, then when the next market shakeup comes, you probably are underprepared. So with that, I want to conclude the presentation and pass the mic back to Anka and team for any questions.
Thank you very much, Tarun. Just to remind everybody, please use the Q&A chat to place any questions. Okay, do we have any questions? Or raise your hand up and we can unmute you and you can just ask directly. Okay. Well, can I start with a question just to make a first one? What are the key reasons why the AI uptake has been slow up to now, you think, in energy companies, Tarun?
That's a great question, Anka. And I think whenever a technology has come in, usually we see it's got a hype cycle of its own, right? When blockchain came in, no matter what the problem was, the answer was blockchain. And everyone said, well, every contract now needs to be written on the blockchain. And 2 years in, we saw that trend faded away, and the early adopters lost quite a bit of transformational budgets in trying to solve with blockchain. Also, when these technology trends come in, sometimes the adoption is hard because the complexity of procuring those skills is hard. The complexity of adopting that technology is hard. What's different with AI is that the application of this technology is very turnkey. I mean, most of us have used Microsoft Copilot, and we see the ability of having intelligence on tap, being able to give a big problem statement and get returns is fairly easy. But when you get better at using Copilot, you can do so much more with it from an automation perspective. Now, as overall we see Copilots rolled out in the organization, a lot of the day-to-day productivity uplift is being addressed through that. So right away, the CIOs have shied away from big IT investments to solve for vertical AI use cases. But as everyone has now Copilot, where do you drive your differentiation? You drive your differentiation by building your own use cases to solve for your own end-to-end complex value chain issues, right? And this is where we're now seeing the uptick in AI dramatically. We're calling this the 2.0 wave of AI. As we mature out of single shot AI into agentic AI, the investments in building AI solutions is dramatically increasing. I'm working a lot with customers in Middle East and Europe, and I can tell you over the past 6 months, the investments have quadrupled, if not more. It's because the faith and the outcome agentic AI is demonstrating is significantly higher the accuracy is significantly higher, the optimization of the value chain is significantly higher. So now we're seeing that trend of more investment show up. But it's also moved past and matured past the nobility curve, right? Which tends to be the first 2 years of the technology. And therefore, there's more trust that this isn't going to be a technology that faded away. Instead, this is a technology that is the necessity of investment within the enterprises.
Okay. Okay. Which brings us to the next question. What are the main challenges that you're seeing when implementing AI, in the companies that you mentioned?
Again, a great question, and one that comes up all the time is if the technology is so turnkey and it's available behind an API or in AI Foundry or in Bedrock within AWS, then where's the challenge, right? Could we just apply this right away? Why is it hard to apply, or what are the failures that we see right away, or the lessons learned? And for me, it's a combination, right? That the challenges are, when this technology came out and it became imperative that it's going to be needed to be applied to create that differentiation, everyone was given a KPI to have at least one AI use case within their part of the business. Now, if you give someone a mandate like that, they will try and solve for that mandate as a tick box exercise, which again led to a lot of AI POCs. I have 5 documents, run books here. I'm going to put AI on top of it so I can ask 2 questions. It's a bit like the Siri or the Alexa moment, right? I can turn on the lights with the switch, but because there's voice AI, I'm gonna put in all of these Philip Hue bulbs so I can automate switching on and switching off lights, right? And these are the problematic point AI solutions that have gotten created because we haven't looked at the holistic value chain. So for me, the success of AI resides beyond point POCs into the holistic end-to-end value chains. And again, we have over 18 months of experience running production agentic workflows for our customers. And the most successful ones are those that are looking at a streamlined value chain rather than point solutions. The other thing is, you need to tie that back to a tangible KPI. If I was to say this AI drives productivity up, well, by what percentage, and whose productivity am I talking about? And if this person is far more productive, then what is the impact on the cost per trade or a P&L metric? And without being able to quantify that into the business case, we're bluffing ourselves, because we're just creating a false economy of success with a untangible metric. And that's why organizations have, while received the funding to do the first POC, without substantial upside at the top of the earning line or the bottom of the earning line, how do you get the subsequent funding to solve for the next business use case, right? And so again, tying that back to a KPI that can drive either P&L upside or protect your revenue, your gross margin, is an important statement that we need to lead with. So for me, these are the real challenges. It's not just the technology, it's where are you applying it, but it's also about having an articulate business value proposition that goes along with it.
Okay. Thank you, Tarun. Do we have any more questions? Okay. Raise your hand up, please, or feel free to put something in the chat, in the Q&A chat. Okay, can't see anything. Okay. Maybe I'll try another one. So AI is making software engineering very easy. Can energy companies build their own AI use cases, or do they still need support from consulting companies like yours? Are you
Again,
now redundant?
Yeah. I like that spicy question, Anka. Really good one. And again, this is top of mind for a lot of organizations, right? Right now, they're saying, if historically, how many developers could we bring in was the differentiation for our organization, because more developers meant more solutions being delivered faster. Now with AI coding agents, less developers can produce far more high quality code. Then do we just embark on this journey ourselves to build solutions faster. And I think the way to think about this is AI has allowed the DIY moment right over in the software value chain. When you think about building a house, you're far more comfortable in building a cupboard when you buy it from IKEA because you can assemble the pieces with good instruction. But embarking on a brand new build of a house, no matter how good the DIY is questionable, right? Is it going to meet the regulatory obligations? Am I going to be able to build it for my enterprise? Is it going to be foundationally strong where I could actually trust it for my most critical business decisions? Are still questions that vibe coding doesn't answer for. Yes, vibe coding lowers the bar to entry for anyone to create a pet project and quickly prove a concept, which is where I think is very impactful. But it also raises the ceiling for experts. Now, consulting companies like ours have 25 years of energy trading experience, with 25 plus years of energy trading technology experience, with partnerships with these large language model companies, with the Microsofts and the other big technology providers. We get early access to this technology. So we're always ahead of the curve. And that, again, we're raising the ceiling there by not just building technology solutions, but building them for the enterprise with the right governance structures, with the right data control structures, with that right trust quality layer, that resilience, that high availability, so that you can trust the data coming out of these solutions as you make your most critical trading decisions. And I think there's a place for both. I think there's a world where this is an and rather than an or condition.
Yeah. That's an excellent point. We got a couple of questions in the chat. One from Andreas, which is exactly this point about trust. I think trust in AI is a key issue here. How can you trust a system that makes decisions that are barely comprehensible, especially during critical moments in the market? How can you ensure that AI decisions are clearly reviewed during ongoing operations? So a matter of trust, yeah.
Excellent question, Andrea. I think this is a topic that has come up a lot. And I think AI has generally gotten better at providing high quality responses that are factually backed by evidence of the data sources, therefore instilling more trust as you read the narrative. But I think the real question we need to ask is when we onboard an employee into a business function, how much do we trust them on day one? And how much trust do we obtain 6 months later working with them or a year later working with them, right? Trust is a gradual progression path. And the same philosophy applies to the technology that we operate in. It's two factors, right? One is how much data context are we providing the agent that we're building? Is it truly an agentic architecture which has multi-turn ability to gather the data, reflect on the data, and improve the quality of the answer? Can we point it back to historic responses and historic analysis to make sure that it learns from that quality of good high architecture data assets to further improvise on the quality of responses? So for me, it's a combination of the three. Yes, just landing an agent into a point solution, it may not have the best quality responses, but if trained correctly, like an employee, and by tuning it to factually provide citation for answers it creates, means we can factually validate those point of views before we consume them within our trading decision. I mean, we've worked a lot on the front office side, and we're building front office based trade strategy agents, which are actively consuming the market data from GD market, interconnectors, and other trading exchanges, and coming up with trading strategies for continuous trading markets. And these trading strategies are being reviewed by traders, right? And so that's our feedback engine. We're not automating that process completely. And we're seeing more and more 70 to 80% high value accuracy there. And when you start to further fine tune them on certain markets or certain market segments or certain market channels, you see the accuracy go up even further. So the architecture definitely can provide for high value, high quality responses, but it is a journey. I will be honest with you that on day one, the accuracy may not be as high as you would want it to be, but by month 3, the accuracy is almost as high as a human, if not higher.
Excellent. Thanks, Tarun. And we've got another question from Maxime, which says, over the past 2 months, I hear a lot about agentic AI. Everybody's speaking about time efficiency of about 40, 50%, but it seems that only applies to standard processes with solid framework. Are there any real success stories, especially in the environment of fragmented data and multiple TRMs in use?
Yeah, great question, Maxime. I would say that agentic AI is certainly becoming the foundational architecture for all future AI use cases. As I alluded to earlier, single shot AI just wasn't the right architecture. You had one go at asking a question. If the agent could not, or if the AI couldn't gather enough information context, it just tried to make something up. With agentic AI, you have something that's called the orchestrator, and the orchestrator is able to pull in the right agents depending on its understanding of the problem surface. Now, with the evolution of the models, you're seeing a series of models which have thinking capability. It's chain of thought that they create. So if I give this orchestrator agent, which has this thinking mindset, a problem, it creates a chain of thought, just like a human would, to solve for a problem. And then based on this chain of thought, it comes up with a plan for which agents am I going to need to solve for this problem. So for example, if I'm settling a PPA contract and this contract is quite bespoke and it's using negative price protection, when this agent starts to create the chain of thought, it breaks this down into steps. And then looking at the steps, it knows negative price protection is an aspect of the contract I need to look at. Where is my data gatherer for negative price protection? So rather than being sequential in how it navigates through the agents, it dynamically calls the right agents, not in a predictable 101 way, but in the right way. And that's why having a broader agent fleet, which purposefully solves for these problems, is necessary, because then you get the most optimal outcome. So for me, as I see the landscape evolve, the combination of agentic AI with thinking models, which are creating the chain of thought, and a big repository of purposeful agents can solve for very complex problems, which are then resulting in the metrics you're alluding to there. And this is where I think the biggest impact within energy trading firms will be realized over the course of the next 12 to 18 months.
Okay, thank you. Maybe we have 2 minutes left. Please drop any more questions into the chat. We're going to try to address them afterwards. There is one that we have. It says, thank you for a very interesting presentation. You've explained the importance of modular systems with regards to ETRM embedded within an operation model driven by AI. Could you please explain this concept, namely the interaction of modular systems with an holistic AI, once again, possibly with an example?
Yeah.
If we run out of time, maybe we can address that later, but let's give it a go. 1 minute.
Sure. I mean, feel free to connect on LinkedIn. I'm happy to have a follow-on conversation from here. I mean, modular ETRMs, there came a time in 2016, 2017 when ETRMs became the solution for everything. And this is where you saw ETRMs every year adding just more functionality into their broader mandate. And then there came a time in 2018 when we started to decompose these ETRMs and take out functionality, which we thought we could do outside the ETRM more robustly with more nimbleness. So for example, trade capture now has been taken out completely, and we capture our trades through SDP. We can fan that up, fan that down, and process them far faster. And therefore, we can do more disaggregation on the trade data. And as a result, we can run models quite effectively across those trades. Now, in the same way, a lot of the credit risk processes are being taken out for certain organization, and that decomposition of the ETRM is the modular architecture we're talking about. So as you decompose, you get faster access to the deaggregated data, and that disaggregated data is the food or the oil that is needed by the AI agentic machinery. Now, conscious of time, I'm not going to elaborate too much on this topic, but happy to have a follow-on conversation if this is of interest.
Oh, okay, good. Well, thank you so much for attending this session. Just to remind everybody that we have more such sessions coming up. So I'm going to paste it in the chat. A recording will be made available on our YouTube channel by the end of this week, and looking forward to welcoming you to our next webinar. Thank you so much for attending, and thank you, Tarun.
It's a pleasure. Thanks, everyone.